So, hello and good afternoon. I welcome you to today's special webinar, Discover Tactics of Discretionary and Quantitative Pro Traders. And obviously, it's the first part. I welcome you. It's a special webinar exclusively for JFD brokers. And today, I'm really happy to welcome a quantitative pro trader here, Stefan Friedrichowski. So it's a PhD in physics, and he will a little later, give an overview of his approach, of one of his approaches, based on power candles. It's a very interesting approach. There's a small anecdote I just want to give you here. So there was once a seminar here in Germany where one Wall Street trader came. And he also presented some educational pieces, and that was kind of special, since you don't get so many U.S. American speakers, pro traders here in Germany to speak. And it was a very big trade fair here in Germany, and I listened to him, and that was, by the way, the first time when I got in touch with power candles. So he said we taught some of our students, if they see a big green candle or a red candle, then just buy the green one or sell the red one. So it's very simplified, but something Stefan will give some details on a little later on. By the way, Stefan, do you want to say hello to the audience?
Yeah, of course. Hello, everybody. Nice to be here. And yeah, nice to have that kind of introduction. So more or less everything is already mentioned, said about the power candles, but I will give you some more insight into those power candles, because I always like to introduce really a trading setup and to share with you how I derive really trading setups which have a statistical edge. Yeah, and that will be part of my turn later. But let's first start with the part of Jens.
Yeah, sure. And I will make long things short. So 1 second, by the way. So first of all, the risk disclaimer is always very important to understand that trading foreign exchange, CFDs, all the products we present here, that those products on margin traded carry a high level of risk, and that the discussed products may not be suitable for all investors, and that you please ensure that you fully understand the risks involved. And so I'll give you a short overview here of the agenda. It's very rough, so please excuse that. But I don't want to make too much color. Or I didn't want to use too much colors here. So it's just 3 points we want to go through here. And in fact, we want to start with a special offering from JFD brokers. So we'll have some banners on FX Street from tomorrow onwards, and it's a very special offering. You will see here, since those banners, they will lead you to an offering which is, as already said, exclusive for FX Street here. And now the thing is that you can register for this if you come to the website from FX Street from tomorrow onwards. But all those who today listen to this webinar can register already now. You'll find the chat box on the YouTube channel, plus in the chat box from FX Street. And so the thing why I emphasize this is that this offer is limited to the first 300 accounts. So that doesn't necessarily mean that you have to register within the first 300 to get to take advantage of this offering, but it will be limited to the first 300 accounts. All the details about this this promo action, just check it via the mail in the chat box. And as already said, after 300 accounts, the offering is not available anymore. So that means you have time. That's, by the way, something special about JFD in general. You may have wondered why trading with JFD is such a great thing. So why do professional traders like Stefan or me use JFD? Why Stefan as a pro trader in terms of quantitative quantitative approaches, why I, as a money manager, for example, who's trading clients' money here, why do I choose JFD over all other competitors here? Why do we work exclusively with JFD brokers? So there's a reason to that, since JFD brokers is not having a market making license, so they are not allowed to trade against clients. They have some very great technical, a great infrastructure of technique in the behind the scenes, which is making our execution extremely fast, for example. So very attractive for expert advisors trading, EA trading here, high frequency trading approaches, and all these things. And so what you can do here is you don't need to open the account right now. So but what you can do is you can save your place here. So you can just register now, and within 1 month then decide whether you want to open an account or not. And as already said, nevertheless, after 300 accounts, this offering then stops. And that's all I want to say here on this topic. So that's the special offering which JFD created for this event here. Now the topic of this webinar now is on 2 topics, in fact. So I've already said something about power candles and something what Stefan will present to you. But the second topic here is on sentiment trading. So some of you might have heard this, but I mean, on the other hand, it's an English webinar, so I wrote the book in German. But it was a book on FX trading, especially on FX trading, and here on sentiment, the sentiment in retail trading especially. And in this book, I presented a trading approach. And this is something what I want to present to you right here, right now. In fact, that was already something what I told Stefan before we started here. I was a little nervous yesterday, since I was sure that I had some charts here and statistics which I could use and present a chart to you. And then I found out that I have it somewhere, but I hadn't it here on my laptop. So I needed to recreate this. But all in all, even though that's something I want to add here, it's very rough. And the reason for that is simple. It's not because I don't believe in this system. In fact, I traded this system here, and it's really simple. You can see this here. It's a simple trading strategy. I traded the system for well, minimum over 1 year, very successfully. So I made 20% with an average risk of something between 1 to 1.5% here. So I had very favorable market conditions. And then after this period of time, the market turned, and as you can already see here, so we're working with 2 simple moving averages, the 20 SMA and the 50 SMA. So working with such simple moving averages, or a strategy which is based on simple moving averages, or a moving average in general, it doesn't matter if it's simple or exponential or weighted moving averages. The thing is, that's obviously a trend following approach here. And the thing about these trend following approaches is they obviously work really well in trend following or trending market conditions. So now I traded this approach here on the Euro USD. And what I can tell you is that obviously, and if you had a look here at the Euro USD, probably not at the last 1.5, 2 months ago now, or nearly 3 months, when Euro started to trend higher here, but over a pretty long period of time, Euro not just Euro USD didn't just see a significant drop in volatility, but on top of that, there was also a sideways choppy market conditions, which made it tremendously difficult for the approach. And overall, I faced a heavier drawdown after trading the system very successful here. And that was when I stopped trading this approach, even though I have to say, I bet that there will be a point, especially when volatility picks up again, when this approach will work again. And so you probably may have screenshotted already this screen here. As you already can see, the entry long is generated in the moment the 20 SMA crosses above the 50 SMA here on an hourly chart. So it nearly generated 4 trading signals per month. I'm sorry. meaning around 1 trade per week. The entry short simple is a simple moving average crossing below the 50 SMA on an hourly chart. And then very interesting here is the stop, which is ATR based and is using 2.5 times the ATR. So in the moment, for example, a volatility index on the euro, so you can probably find, or for example, find this at the CME with the EVZ. So this is the if you want, it's the VIX on the euro future. And so if this is trading above 10, this index here, then the ATR is, for example, 2.5 times the ATR. Then I multiply the ATR on an hourly chart with 2.5 here. While, for example, if the volatility drops below 10 in this index here, you can then go down with the ATR to 2. And on the other hand, I'm working with a 3 times ATR based stop in terms of the take profit. So I have a profit factor of 3, meaning if, let's say here the ATR is 10 and I'm multiplying this with 2.5, I'm working with a 25 pip stop, and then I multiply this with 3, generating a take profit here, which is 75 pips away from the entry. So this is the approach. And what you then can find out is, or what you found out here is that this approach, when you back tested it back to 2010, you generated a tremendous payoff. It was a tremendous equity curve. It worked really well during these times. And you may remember that in 2014, then during summer, volatility dropped enormously, and that was the point when the strategy then started to get some trouble, even though it still performed well. And what I present to you here is the time frame where this approach tested. And what you can see is that here from January 2014 till June 2015, so for 1.5 years, you can see in an orange here, you can see the equity curve for this strategy with sentiment, retail sentiment as a trading filter. While in blue, you can see the same strategy without a filter. What do I mean with filter?
Sorry to interrupt you, Jens. It was just one detailed question, because you mentioned that you use an stop ATR based. What period do you use for the ATR? Is it the standard of 14?
Yes, it's the standard. Sure, I just see. Yeah, sure. There should be 14 then, ATR 14. And 1 second, I'll change that.
No, that's great, because then we have all the details exactly perfect. Thanks.
Yeah, so that's the great thing about having someone here, since since this is an obvious question. But now the thing is, in fact, I forgot something. I didn't write it down, but I will now mention it. So the question is, what is meant with filter? So filter means usually such a strategy, entry long, entry short, works like, well, you're going long the moment the SMA crosses above, respectively going short if the SMA crosses below. And the thing here is that you're going long and short, and you're not considering any market conditions here. But now the filter means in this case that I say, well, I'm only going long if a sentiment indicator, and there a broker comes into play, retail broker. And you can use plenty of brokers here. So I highly recommend trading via JFD brokers, and you get sentiment data from JFD brokers here too, by the way. So 1 second, I'll just show this to you, how this looks like. So here, this is the web. Oh, I'm sorry, this is a German website from JFD. 1 second, we'll go down here to the English version. And here you have research and education. If you go to the website, the research website from JFD Brokers, you can scroll down a little, and what you can see here is JFD Brokers open positions sentiment. So how are the retail traders positioned here? And right now you can see that here the overall retail sentiment is net short, showing that there's 54% short while you have 46% net long. This is an environment where the strategy I just presented to you would go long only. since you use the retail sentiment as a contrarian indicator. So you do the exact opposite of what the masses are doing, let's call it. And the same thing the other way around. So if you see the retail sentiment being net long, like for example, it's here in Australian dollar, US dollar. So it's 58% long, while it's 42% short. Well, you're going short. Since you have an overall long exposure here, so this is the majority, and then you do the opposite from what the majority does. And then you're just going short. And this is the filter I used here. And even though this chart doesn't look that pretty, it is the same time frame here. So from January 2014 till June 2015. And the very interesting thing is that you can already see here, which is, by the way, no big surprise, that here, when trading with the filter in orange, you're trading half the time of what you're doing in case of when you're trading without a filter. Since here, you're deciding whether the market is net long or net short. You're deciding, well, whether you go long or whether you go short. While in the second case here, you don't decide anything, but you just click the button. You say, okay, EA run, and then he'll just trade long and short without changing any direction of trade here. And the interesting thing is that it's the same time frame in both cases, and you can see a clear divergence here. So at the beginning, the strategy without the filter performed really well and pushed really higher, meaning that after nearly 50 to 60 trades, it was ahead 20%, while the trading strategy with the filter here was just showing a small profit of less than 10%. But this changed dramatically once the market then changed the market conditions, let's call it, and started to show low volatility. So that was during the time in summer around here. And that was when this trading strategy without a filter started to perform really bad. And that was when here using a filter worked out pretty well, especially also here in terms of scaling down with the frequency of trades. And this played out really well. So after 1 year here, even if this doesn't look like this, you had half the size of the trades here, or in this case, around 90 trades you did with the filter, while having around 180, 192, I think, trades without the filter, while having nearly a performance of plus 20% here with the filter, while having lost 10% in the same time frame using no filter at all. And this is some really interesting observation, let's call it, which is I think perfect for Stefan taking over right here, since the strategy itself is really simple. But as you can see, if you put in the right filters, or not the right indicators, we should be really careful with indicators, but the right filters. And if you really know what a strategy is looking for and what you try to capitalize here, in this case, really profiting from trends developing, you can do exceptionally well in the trading market environments, even though the strategy, for example, has to be adapted, since from time to time market conditions change, sometimes dramatically, and then resulting in the strategy not working well at all anymore. And
okay,
yes,
I have once again a special question here. But first I have to mention it's really a great strategy, and I like the approach of having a base strategy, which is in this case 2 SMAs, and then getting that strategy absolutely fantastically running with that additional filter. But if I now ask myself a practical question, at what point in time you look exactly to the sentiment? So let's think about, we have a cross of a long entry signal, and is that exactly the point in time that you look to the sentiment and ask, how is the sentiment looking? So that's, let's say, first question. And what if now your long trade is running and the sentiment turns? Do you change the trade? Do you stop the trade? Or is it just you look once at the beginning of the trade, and then you wait for the end of the trade? I don't know.
Yes, to answer the last question here, yes, I wait. So I don't stop the trade manually or something, but I let the trade run. So I do not interrupt the expert advisor in this case or something. So I just leave it as it is. But I already might change the input parameters for the EA itself. So for example, then saying if there's a switch, and probably sometimes it's a brutal shift, let's say. So I've seen occasions where the ECB, for example, had an announcement. The market was heavily net short and then switching aggressively into net long territory, which, by the way, means that euro came down really aggressively after Mario Draghi announced, for example, we'll consider a QE program or something. So that's usually the time when the sentiment sees some really aggressive shifts. Doesn't happen that much, but if it happens, you have to adapt the expert advisor accordingly. In terms of the sentiment itself, so what I did here was, by the way, something I'd say really rough too, but it worked. So what I did was I took a time every day. So in this case, for example, 12 p.m. GMT, I looked at the sentiment at the broker I work with. So some brokers, by the way, do this automatically for you. If it's cannot be found here on the website, then from time to time you can call a broker or send the email to them and say, could you please give me all the sentiment data available? So that's just one little tip I'd like to give to the audience if you plan to adapt this strategy to your trading. And then I say, okay, at 12 p.m. GMT, I look, are the market participants here at the broker I look at, are they net long or are they net short? So if they are net short, I write it down. So in this case, meaning here in, for example, that I calculate a ratio, then saying net long, net short, or working with the, in this case, probably a little better with a different, what's the English word for Vorzeichen? Probably you know this. Sign, yeah, with a different sign. So meaning in this case, so 50-50 is 1-to-1. And the moment here, we now see 54% short, while 46% long, meaning that you then divide 46 by 42 and subtract 1 from this. Getting, no, subtract 1 from this, I think works.
Yeah,
yes.
It works.
And then you get a negative sign, meaning here that you have a net short sentiment. And that's all, nearly. So all I do here, in fact, is I just look at whether the market is net long or net short at, in this case, 12 p.m. GMT every day. And then I write this down. And as long as the market did not switch to, in this case, from net short to net long at 12 p.m. GMT at one day, I don't stop the strategy, respectively reverse it then to net long. Even though if you carefully watch this, and if you're working with such an SMA of 20 and 50, it takes some time. So sometimes it is that the market switches from net long to net short or net short to net long, even though there are no signals generated during this time, since on an hourly chart, it takes some time for the market to cross below or above. And then that's giving you enough time to act accordingly.
Perfect strategy, well understood. And the good thing is, yeah, you can easily adapt that kind of strategy for your own trading activities. Very good. One additional question. Did you ever try on other underlyings, maybe Euro, Japanese yen, or?
Yes, I did. In fact, and it worked well on dollar Japanese yen and also on GBP USD. While I have to add here, I only traded it live on Euro USD. So I never tried it on dollar yen or GBP USD here in a live environment, but only back tested it. But I was thinking about trading it live then on these currency pairs too. The problem is that the strategy right now just doesn't work anymore. So it went in a horrible drawdown. So in fact, at the beginning from 2016 onwards, I think, and if you carefully watch what happened here during this time, so let's just have a look here at the Euro USD and hourly chart, and then where is it? 2016, yeah, here. So you can see here that there was a trending market environment, and here too. But all in all, the market environments were sometimes very brutal. So what happened very often was that you got stopped in and then got spiked out of the trade, and after you saw the market run in your direction. And this happened. It happened too often, and then you just saw a drawdown, and then I was scaling back with the position size, for example, so going down more and more and more and more. At the end, just risking 0.5%, but even that didn't stop the drawdown at all. It somehow slowed it down. But yeah, the problem just was that it didn't work well anymore. Nevertheless, I still observe it. So since it's, as already said, it's a very simple approach, and it's easily traded if you want. So if you have an expert advisor, and some of you might have seen that an SMA crossover strategy is usually the standard you can backtest in the MetaTrader just to get somehow used to this. Yeah, it's just it's nothing. Let's call it mind blowing or something. But it's yeah, it's definitely worth a try, especially if you're using the sentiment as a filter here.
So from my experience, the best trending underlying from the Forex is Australian dollar, Japanese yen. So because I think for that kind of strategy, you need a trending behavior. And that might be a good underlying of choice, because that underlying is really moving and is not wiggling around like, for example, Euro, Swiss franc, or Euro, even Euro, British pound is sometimes a little bit boring or just wiggling around, which is not good for that kind of strategy. But Australian dollar, Japanese yen might be a good choice.
Yes, I completely agree with that. By the way, I love cross pairs, so not having the US dollar in it, but Euro yen or something. But here, a little problem comes into play, and this is really a big problem, in fact, because you can easily get those data here regarding the retail sentiment from brokers, but Australian dollar, Japanese yen is not as frequently traded as, for example, the Euro USD. So the pool of traders you look at when trying to figure out their position is not as big, as deep, and as wide as it's, for example, for the Euro USD, meaning that you see some even more brutal moves here in the switch of the retail sentiment, generating sometimes signals which probably don't be so good or not as significant as, for example, in a currency.
Yeah.
Yeah, but nevertheless, definitely worth a try. So if someone gets good data on this, or you can, for example, work with calculation here, like Euro USD, looking at Euro USD, and then looking at the dollar yen, for example. I'm sorry, Aussie USD and dollar Japanese yen, and then you can somehow calculate a sentiment based on the sentiment from Aussie USD and then from dollar yen, even though you'll get some small mistakes in it, so it won't be so clean and clear. But I definitely bet that there will be some nice approaches.
Absolutely.
Here. Yeah.
So very good. So thank you very much. So I can take over, Jens. Is that correct?
Yes, sure. Please.
Okay. So then let's try to get my screen up and running here. Okay. By the way, it's really nice to be here, and I like the kind of format we have here. So hopefully you can see my screen now. So yes, can you check? I hope that.
Yes, perfect. Yeah.
Now it works perfect. So now we go for power candles, and the good thing is that Jens has already shown that always important slides, so I can skip it. And Jens has already introduced me, which is really great. And just a few remarks additionally here. So what I do is I apply my knowledge from physics really a long time ago. So I'm 51 years now, but nevertheless, it's always the mathematical and the statistical approach which I like for trading ideas and for trading strategies. And those ideas are then tested, back-tested, evaluated via Excel, which I will show here today as well. And for the smaller time frames, I go down to self-written C programs in order to develop and optimize all my trading strategies. Finally, those trading strategies are running at JFD Wealth Management. So that's a point. Yeah, so that's why I do it and for who I'm doing that. So it's JFD Wealth, so that we have other just adapting those kind of strategies. And you see already here an email address. I know my last name is really complicated, but maybe a screenshot might help. So it's Friedrichowski. Don't try to really spell it, but just make a screenshot of that, and then you know how to.
German name. It's a
yeah, it's a Polish name, yeah. So you might need that email address later, because I will present you an indicator, and if you like that kind of indicator, I can simply send it to you, but just then you have to send me an email to s.friedrichowski@jfdbrokers.com. So that's the way how to get in touch with me. So what I will present here during the next couple of minutes is I will start with a few general remarks on how to develop trading strategies and what kind of things I use there. Then I go direct into the main topic, and the main topic are power candles. That's a mighty tool, and it's easily adapted to your own trading activities. I will directly show within MT4 how to do it. And even today, which is a public holiday in US, the 4th of July, even today, market is quite calm, but as already mentioned, there are sometimes other currencies showing much more volatility, like today morning. That was the Australian dollar. And we will use that example for a power candle as well. So, as mentioned, how to create trading strategies. So, it's the starting point is always the same. I have either an observation in the chart, or there are some other basic considerations. So, when I talk about observations, one example for if I see Friday Dow Jones goes up in the last 2 trading hours, then on Monday morning the DAX is following the Dow Jones. Maybe that is an observation. And then you look to the chart, go back a couple of weeks, and you see, yes, doesn't look bad. And exactly those kind of observations are the starting point for any strategy. But what's important is that you don't stop there. Not only looking for the last couple of weeks whether your observation is right, and check it just for a few examples. That's what I sometimes call statistics 1, which is not a statistic, and even a statistic of 4 examples is by far no statistics. So go back to the real history of data. We have access to historical data, and that's on my next slide. And then really try to figure out, is your observation, is your idea right? Yes or no? And only if that is proven, then you know you have a probability advantage or a trading edge, and that is exactly what we need for our trading activities. Finally, it's not only an observation, just seeing, hey, Dow Jones is performing well on Friday evening, and then I can open a DAX trade opening Monday morning. That is not enough. We need a clear setup. That means we need clear entry criteria, exit criteria, and most important, we need a stop loss. And that stop loss finally brings us to the point that we can calculate our position size according to our risk settings and our account size. So, but that is the next step. Probability advantage is the first one. And finally, we need trading rules, a real trading setup. But if I talk about checking such an idea in the past, then of course you need historical price data. And one source is simply MT4. You can export data from MT4, but if you want to have a longer history, then there are other good sources. I just want to mention them here, that you find some places in the web how to get historical price data. And the first two are D1 only, so that's Yahoo Finance, and the other source for price data is called stock. And I repeat what I wrote down here. That's not a spelling error. It's really a Q within that name. It's a Polish website, and there you can really nearly find everything. And data history, Dow Jones, for example, starting at 1900, so more than 100-year Dow Jones data. If you want to go for intraday data, then there are two other good sources. One is called HIST data, and the other one is Dukascopy. And there you can really get intraday data starting from seconds up to months. Everything is possible. And those data I use here as well. So if I now go back to my power candles, we will later try that on H1 data. But power candles is now the topic to give you a probability advantage in your own trading activities. So first of all, what you can try is you can try to look for the candles itself. So, and when I look for candles, H1 candles, for example, and I talk about power candles, I always look to the candle body. The candle body is not the difference between maximum value and minimum value. Candle body is just the difference between open and close of a certain candle. The reason for just looking for candle bodies is quite simple. You might sometimes you have huge candles, so-called doji candles, which have nearly no body, but maximum and minimum are far away from each other. But that is not a power candle. That is more a candle of uncertainty. And what we are looking is to give a direction for our trade. And therefore, we need huge, big bodies of those candles. And what you can try to do first is you can look for the distribution of those candle body sizes. And of course, without now showing those statistical examples, what you have directly in mind is that the bigger the candle is, the less often it will occur within the historical data. So really, really huge candles are less often than small candles. But now the big but is. The big but is that statistically, those big candles occur too often. In general, that distribution you might see if you look for the candle size body distribution, it looks more like a Gaussian distribution. But the tails of that Gaussian distribution are too high. And that is called black swan events. So that black swan events occur much too often than if everything would be random. Or on the other hand, that means power candles are a deviation of that randomness. So normally you see within the chart, prices wiggling around, going up, down, and you don't see, you don't get a clue of what will really happen within the next hours and days. And that is what I simply call the randomness of the prices. But if you have a deviation from that randomness, exactly that is the point that a trader has a chance. Now we can open our trades and we can have a statistical edge. The driver for those power candles, honestly, are mainly news. News, whatever reason. So it might be scheduled news like Friday afternoon non-farmers payroll data or whatever. Also other news, maybe not good news, that something really severe happened around the globe. But those news normally produce power candles. And the good thing is that the big market participants, so the big money, now has to reveal their real interest. They have now to change maybe their positions because the price is against them. And that is our chance. And just to have an example here, and then I can come to the overall question about power candles. That is now a typical example. You see within that chart, it's an H1 chart of euro US dollar. And here marked in red, we have a big candle with a big body, and that is later called a power candle. And the overall question is now, is there a typical behavior, so let's call it a price action, after the occurrence of such a power candle? And you see already here, I have indicated with red lines, maybe something like that is really representative for the follow-up after a power candle. So maybe it goes a little bit down and then goes exactly into the direction of the original power candle. So we have a green candle, so we might open a trade, a long trade exactly after that, or we might wait a little bit, and then our long trade is exactly running like in this example. But now we are back to my statement. That is now statistic 1. And if somebody is talking about power candles, of course, he shows an example which proves the basic idea. So we have to check out whether that's in general valid. And how to do that? It's quite easy. So what I have done is I have downloaded data of H1 euro US dollar starting at 2004. So we have data here for more than 13 years. And within that Excel sheet, I simply calculate the size of the body, which is the difference between close and open. And then I decide, let's look here, if that size is above a certain threshold, and that threshold is in this case 30 bips, then I mark it with a 1 here. And of course it's an upwards candle because the difference is positive, so sign is positive, and therefore I get what I call a long signal. And what I have done here is, and let me press into that, then you can get that colorized here. I have calculated the future out of that, from that starting point. So from that close onwards, I simply calculated the price change for the next 24 hours. And that's what I have done here to the right. You see, now we go for 4 candles, 4 hours in the future. And here we go 7 candles into the future, and so on and so on. And then I have simply sum up all the data, so that finally, if you look to that chart here, to that graph, what you see here is the accumulated, or you can even say the average, because if I simply divide it by the number of power candles, then it would be the average price change. Then you see that in general, the price is going exactly into the direction of such a power candle. Short trades, I simply go with a -1 as a factor, and therefore if a short trade is going into the right direction, which means the price goes to the south further, then of course it's price difference minus difference. But because I short trades, let me scroll down here, are indicated with a -1, then I do the calculation right. So my assumption is short power candles go short and long power candles go long for the near-term future. And that is now really confirmed within the typical behavior. And now we can change here the size of such a power candle. The threshold limit, in this case, it's 30 bips. Let me change, for example, to 40 bips. The 30 bips, we have nearly 7% of all our candles have been of that height. Now 40 bips is only half often, so it's only 3.5% now, and you see similar behavior. And what I have finally done is I plotted this behavior for different threshold values, 20 bips, 40 bips, and so on. And overall, I can see that, for example, after 24 hours, after the occurrence of such a power candle, it's always positive. So that means we have a statistical edge that after a power candle with a specific height, then the price goes exactly into the direction of that power candle. So what I have done here is now, let's call it a proof of concept that the idea is right. Yeah.
Yeah, I just have a practical example here for this, for example. I'm really sorry to interrupt you here because I bet that many participants right now say, "Wow, this is just great. Please shut up, Jens. Leave Stefan to to follow up on his remarks here." But the thing is, last week, for example, some of you might have seen or heard about Mario Draghi here talking about what was it? He said that the deflationary forces are replaced by reflationary ones or something. And EURUSD just shot through the roof, went above 113, is currently pushed above 114, and is right now coming back a little. And this concept of power candles was something I mentioned between the lines during the morning meeting. When I told people, I mean, and this is a natural tendency of humans here, human behavior, if you want. So you usually fade this momentum. You usually do the following. You say, well, the market has to come down because it's so extended on the upside that you just say, hey, I have to go short here. But this is a perfect example of that this behavior should be somehow overcome, and you should look at it from pure statistical standpoint. And as you can see here, I mean, EURUSD hasn't corrected that much of the move here, but showing exactly what Stefan just presented here from a statistical standpoint. So shorting these big candles or going long against the big red candle here is obviously not such a good idea. Yeah, that's all I just wanted to bring up here.
Perfect. And I will follow up on those kind of examples. I hope my screen is still here, that all of you have my screen. Okay, perfect. So what we know now is we have the probability advantage of power candles, and I can say you there are some additional variants of that idea, and that is one is already mentioned. You might wait for a small correction before entering the trade, or another variant, and that is the one I will follow up here within the chart, is that we measure those power candles not in bips, which would mean in absolute values, but what we can do as well is we measure those power candles in units of ATR. That means if the overall volatility is low, then maybe already a 20 bips euro US dollar candle is a huge candle. But if we think back to 2008 during the financial crisis, even a candle of 60 bips would have been normal. And so that means if we use the ATR as the unit to measure, then we take into account the overall market volatility as well. And that's what I will do now here. I use an MT4 indicator for those power candles. And that indicator has been coded by Peter Milner, a colleague of mine. And you can have that. I can tell you one remark on that. First, you have to send me an email. Second, it only runs on JFD accounts. But anyhow, we can get nice results there as well. But let me really show you the indicator and the concept as well. So what you see here, let's start with the overview. 6 currencies, but I will directly enlarge one chart here. And now I can explain a little bit how that indicator is running. So we look now to Euro Australian dollar on an H1 chart. And the indicator is in the lower part of my chart. And what you see here is one in yellow, that's the ATR value. And then we apply a certain threshold. In this case, it's 4 times ATR. If the body of a candle is bigger than 4 times of that ATR value, then it's already highlighted within the chart. So now we have a candle here, or a bar in yellow. So this is a power candle in that definition. So we are here. And the idea was, after that power candle, price goes exactly into the direction of that candle. So opening a long trade here was the idea, and you see what happens later. Today morning, we have had an additional power candle within the same currency, Euro Australian dollar, and up to now, okay, nothing changed, at least to the current situation, but let's see what happens the next couple of hours. Back to the example of Jens, because this is really a brilliant example. And what you have mentioned is exactly that candle. That was the candle of Draghi on last week. And this one here is colorized and highlighted through that indicator. And you see, wow, perfect, works. So that is the idea of power candles. And even without those indicators, you clearly see those candles within the chart. And since I'm always honest on those things, you have here 2 examples which did not work, but that's normal. We don't have a crystal ball with 100% probability advantage. You see 2 big candles here, one long power candle and followed a little bit later by a short power candle. The short has worked during the next 24 hours, but the long one has not worked. So that is an opposite example, but that's normal. And you see, that indicator is quite easy to manage, and the only thing you need is 2 numbers, the ATR period. And in this case, I go for an ATR period of 24, not the standard value of 14. Simple reason, I always want to cover one complete day, so that I don't have only night hours, which are normally not that volatile. So I have always exactly 1 day history in order to calculate the ATR value. And I use the threshold, in this case, of multiplier for ATR of 4. And that's all. That's the way it works. And that gives us a probability advantage for our trading activities. So it's quite easy to use. And to summarize it a little bit here, so we now know that power candles are a deviation from randomness. So we can call them black swan events indicated by the chart itself. And they open us a trading possibility into the direction of that power candle, and that gives us probability edge, and that's good for our trading activities. So that's my summary about power candles.
One question here on the setups you might formulate based on them. So your stop, for example, if you enter the trade after such a power candle, where would you place the stop and where is the target? So meaning if it's the risk reward of, let's say, 1-to-1, for example, since the probability to hit is higher, and so you get an expected value of bigger zero, or is there any other approach you use?
No, in this case, to use it directly out of the chart, I place stop loss and take profits really out of the chart, following standard technical analysis, looking for resistance, looking for supports, and those will give me my take profits and stop losses. I have done some additional work to run those strategies completely automatically via expert advisors. Then I have completely defined rules for stop loss and take profits. And I can show you a little bit about that directly here. For example, that is one of those JFD Worlds accounts. In this case, it's running on a daily base. And this account has started 2.5 months ago at 2,000 euros, currently running at about 2,100 euro, following exactly that strategy. But in this case, the trades are managed individually, and they have defined stop loss values and take profits as multiples of ATR to give you a feeling of what does it mean. So a typical stop loss is 3 times ATR, and the typical take profit is then between 6 and 9 times ATR, meaning a risk-reward ratio of 2-to-1 or 3-to-1. That are typical settings for that fully automatical strategy.
Do you have numbers on the maximum drawdown for this approach? Because I have to say, and I don't say that this really often, so some of you might have already heard several webinars with me. I'm very honest. This is just great. This is 5% positive performance in what did you just say, 2.5 months? And I bet the drawdown won't be that big. So
no, within that account itself, the drawdown has only been, I think, 20 or 30 euros. But it's good that you ask. Yeah, the strategy is adjusted and calculated for the last 15 years, and all the risk parameters are set in a way that I would accept maximum drawdown within this 2,000 euro account of 500 euro. So meaning 25% is the allowed drawdown for this strategy. And yeah, obviously I'm far away from that drawdown. But that's the way how I do strategies at all. They have always an allowed drawdown. And in most cases, it's 25% of the starting value of the account.
So, ladies and gentlemen, Stefan Friedrichowski just introduced the holy grail of trading to you.
Definitely not, but it's one element. And you can see here down 9, in this case, 9 strategies up and running. And honestly, currently, this one is the best. But that's a little bit luck, as always. But there are other strategies not performing that well. Just since, yeah, Jens and I, we know each other, and what we appreciate always about trading is if people show really the truth. And I give you another example. And this one is the account directly H1, power candles H1. And same story, account started at 2,000, currently 20 euros in the minus. Yeah, so within 2.5 months, not earned any money, but that's trading. That's real trading, not fantasy trading, no big stories around them. It's simply the truth. So you see both. And but of course, I believe in the H1 as well. So why stopping now with the minus of 20 euros? So let's see where this will be in a year from now. And yeah, but that is the way Jens and I talk about trading. It's not just talking, it's real trading. And therefore, we have drawdowns as well.
By the way, it's really interesting since we haven't spoken that detailed about drawdowns, but 25%, for example, is also the number of maximum loss I'm willing to take. So if I'm trading my own account or if I'm trading a managed account here for clients, it's always 25%. So this is the threshold where you have to really check what's going wrong here. And I'm also far away from this, but nevertheless, it's a red line. You just draw it. You have to draw it since, yeah, as already said. So sometimes the market conditions are well and you're performing well and you can capitalize well on your advantages. But sometimes the market does not work the way, or it does not behave the way the strategy can perform well, and then you have to adapt. And I think 25% is a good point, since it will be really difficult to make this money back, even though you're not completely done. You haven't reached the risk of ruin, like, I don't know, 50% drawdown or something, and have to make 100% to break even again.
Yeah, finally, it boils down that we need rules, and those rules have to be accepted, and we need discipline to follow those rules. And that's, yeah, maybe the most important part of trading at all.
Yeah, definitely. So I just had a look here at my watch. So it's 4 p.m. here in Germany, so meaning 2 p.m. GMT. I think I'm not sure. I bet we could give some more details here. But the great thing is we have 4 parts of this series. So there will be another live trading event. So today, not real live trading event, since the market with the Independence Day is a little difficult. But next week, I think the plan was that we'll have a live trading here. There will be also other strategies, momentum strategies. You will also present another strategy, right? An open range strategy, if I remember that right.
Open range breakout. We will go for some seasonal trading strategy. So you will see there's a lot of we can cover, and we want to share our ideas to all of you. And yeah, every comment is welcome. So still you see my email address, and even if you want to get in touch with Jens, no problem. You can send him an email or you can use my email. So we will take care that everything is answered if there are any questions.
Yeah, so thanks a lot for all the people being here. Thanks a lot for Stefan being here. And happy trading. That's all I have to say. Happy trading. Watch your stops. That's the most important thing. And then talk to you again next week at 1 p.m. GMT. Yeah. And so
exactly. So see you again. Bye-bye.
See you. Bye-bye.